Let's now welcome in the management at eClerx. Mr. Gupta, who is the CFO at the company, is now joining us. So the revenue growth has been tepid from the top 10 clients or top 10 accounts. Can you just talk to us about that and what is the process to improve that number?
Thanks for having me on the show. On the top 10, we have turned in a positive territory actually this quarter. Although for last 4-5 quarters, top 10 clients have been showing a declining trend year over year. So I think that's a positive thing that happened this quarter. And we hope that this positive momentum in that large client set can be continued.
Confident about the growth prospects for FY20, which is slightly over a medium term from now. But can you tell us how better are the prospects looking as far as the second half of this year is concerned, and what are some key triggers which you're betting on?
So let me first start with the baseline, which is this quarter. So number of positives happened in this quarter, right from hitting $50 million of quarterly revenue yet again, growing 8% YOY in INR operating revenue terms, having more than 2% sequential constant currency growth in dollar terms, and so on and so forth. So number of positives, our earnings are roughly about 70 crores from a low of 57.5 crores just 3 quarters back. So significant momentum there as well on the margin side. In terms of near future, what we are still working on, and it's kind of work in progress, is to grow offshore revenue, which has been very sluggish. Or almost flattish year over year. And I think once that momentum comes back, both margin as well as the top line can grow at a much faster pace than what we have seen in the last year.
When you talk about the margins, how does the currency depreciation help you? What are the hedging strategies? Do you expect the entire benefit to come in the next few quarters?
So our hedging is almost on average almost 14 to 15 months out. The duration is typically 6 to 24 months at any point of time, the hedges that we book. So if you look at the H2 of this financial year, the hedges and conversion of their rates into revenue is already locked in at about 69 rupees rate. So that's a given. Coming to FY20, I think the rate will only move up from here. The current hedges for FY20 are at about 71 rupees. But because we will be layering in more hedges at very attractive 74 kind of spot rates now, that average will look much more positive than 71 by the time we enter FY20.
Could you also update us on the TCV deal wins? How are they like in the quarter gone by? And going forward, how is the pipeline looking like? Any chunky conversions that we can look forward to?
Yes and yes. So H1 has been our best 6 months ever in terms of selling new deals. Why it did not or doesn't show up as good in the net revenues is simply because there is also continuous pace of roll-offs which is happening in the legacy book of business. But having said that, our sales engine is kicking with all engines right now, and it has been the best 6 months. And there are, to your point, there are few multi-million-dollar deals as well in what has already transpired till now in H1.
Sir, can you also just talk to us about the environment that you're operating in? What are the clients talking about? Is demand coming back? US data seems to be looking on the positive side. Can you just tell us about what are clients talking about in terms of spending going ahead?
Yeah, so most of our clients or many of our clients have financial cycles aligned to calendar year, so we will get a better commentary from them in January. But till now, what we have heard or indications we have, the US demand obviously from US clients seems very, very positive. They will decide on the full year next year's plan probably by January, but for balance of the year, new projects are coming with full force, and we are seeing the conversions also.
Sir, thank you so much for taking out time for us. Always good
Thank you.
to get perspective.